All right, what is up, YouTube? I definitely want to make this video for you guys so that way you can understand exactly what the title means. So, like I've always been preaching to you guys about the RSI, chalk and oscillator. We're definitely going to look in, we're going to focus in on gaps today. So what I mean by when I say all gaps must be filled is exactly that. All gaps must be filled, but there's an exception to it. If a company is doing really horribly, and you see the company stock gapping down continuously and never, trying to retrace those steps, you sometimes you won't see those gaps be filled, and sometimes those gaps will just be, air pockets in the stock, and the stock will continue to go down. So let's go ahead and take a look at exactly what I'm talking about. We see Take-Two Interactive. I was looking for a time to go ahead and buy shares. I was able to go ahead and buy shares at about an average of 71.96. So right now for our account, we can actually go ahead and purchase some shares here at about, whatever the price is. This is a 20-minute delay. So with that being said, guys, we want to make sure that we're positioned for, buying growth stocks. So let's check out those gaps, exactly what I'm talking about before we make a buy order here. We see that, the stock gapped up around here about $70.70, just about. We can zoom in just a little bit more. $70.70 just about. And when we see stocks fill gaps, it's exactly what it means. It retraces those steps that it missed. So this is exactly what you see in the XIV. We see exactly what we're talking about here. When the stock gapped up, we see it come back and refills those gaps and retrace those areas. And also we might see some kind of gap fill just about right here. So like I said, all gaps must be filled. We're going to open up a position here on Take-Two Interactive software. And, this is the people that make GTA 2K. And also they just had their Red Dead Redemption 2 push back. So we see lows of about $61 after hours. And, I think their news release was perfectly timed because they made shares super cheap before they came out with their blowout earnings. So let's go ahead and sell some shares here. We're going to get rid of let's see here, let's see, what can we sell here. We're going to get rid of the triple Qs here, credit closing order, about sell, and we're going to make we're going to make this a market order. Right now we're taking gains. We see that we're up, we're taking gains here. That's all we're doing. And let's see if we can get filled here. Okay, we got filled about 101.61. That definitely results in a gain. Go ahead, check, rewind the video back. But right now you can see that we took a gain of about it disappeared. I think it was about $410 is exactly what gains we took. So let's go back to Take-Two Interactive software. Let's go ahead and open up a buy order for it, and we're gonna make a market order, and we're gonna buy just a couple hundred shares here. And we're gonna wait to get filled. And I value this stock at about $90. And when I sold the stock, it was about on the edge of that $60 handle. But I wanted to take gains. But once you learn that you'll definitely pay for trying to trade these stocks. Trying to trade growth stocks will become a really expensive lesson for you, because once you sell your Apple shares at 120. Apple is now, trading at 150. Exactly what I meant. I wanted to take, sometimes I really want to take gains at certain levels that I feel comfortable on, but I really forget that sometimes when I take gains, these are growth stocks, and you have to hold on to growth stocks no matter how, no matter how good it looks, to take gains. We want to hold on to those growth stocks, because if you sell here, when the stock becomes $20 to $30 more expensive, you're going to be like, why did I even sell? What was that even about? So you have to change up your strategy, when you're doing, trading these, these growth names, or, when you're trading these penny stock names. Some people hold on to penny stocks for a long time, and, they are really looking for, I would say, a really high volatile return, or looking to double their money. But you could do the same exact thing on a growth stock. Right, I was in Take-Two Interactive about $47 to $48. That was my buying price, and I sold it at around 59 to 58ish. So let's just note this. If I would just held on to the stock, I probably would have doubled my money. Once it went past $80 and went to 90. So we still have the $30 increment rule is still in place. The $20 increment rule is still in place. So with that being said, guys, we want to pay attention to how the stocks are moving. We see that Take-Two Interactive software has momentum to the downside. We see the chalk and also letting us know that momentum is pointing down, letting us know that the sellers are not done with this stock. But I see it as a discount because, you know, we got the outstanding beat for the quarter, you know, and, you know, the guidance for the year was kind of, you know, lowered because the game they had is going to be delayed all the way into next year. But we did see growth in other, you know, the other names such as GTA, you know, the 2K series, and, you know, you have the other games that they, you know, that they do play. So, like I said, guys, I want to make sure that you know, see the positions that I'm in. I was able to buy shares to take two at about an average of 71.96. I really didn't want to buy shares at 72. I seen that, you know, the stock was trading up about upwards of 76, and I was like, wait, hold on. I really want to catch, you know, this growth name, but I really want to catch shares below, you know, that $70 level, or maybe, you know, at that $70 handle. So I knew that, you know, I was probably going to have to compromise here because I see that, you know, there's nothing but buyers just coming in, buying up these video game stocks because a lot of people are looking to, you know, get into the video game trade because that's exactly where the money is, because these things, you know, they take a small pause for a while, and after that they continue to run higher. You see the same thing with EA Sports. You see the same thing with Activision Blizzard, you know, the people that make Call of Duty, the people that make Madden. You know, you see people going into those stocks, holding on to those stocks because they know people play video games all the time. Also, you have this billion-dollar market for those esports, those e-league games where people compete in those competitions. You know, there's just a billion-dollar market that you know, that really hasn't been tapped just yet, and they're, you know, on the ground floor of, you know, getting into that market. And people are becoming really bullish on all video game stocks. We have a video game ETF, Gamer. You know, you could have bought shares about 25, moved about 40, but, you know, it really doesn't move how you want it to move because, you know, it's not, you know, it really doesn't bring that much volume to it. You see right here, there's never been a time where shares were trading about $1 million here. So we know that the video game ETF is kind of kind of slow, lacking volatility, lacking momentum, and things like that. But we see that we're overbought. The stock really doesn't move that much. We're down about 1.5%. We see EA Sports. You know, that's probably, you know, the lead lagger for the stock. That's exactly why the ETF is probably down right now, or it might have, you know, some more video game stocks in there. So with that being said, guys, I want to make sure that you know, saw the position that I was going to purchase or I already purchased, so that way I can go ahead, snag it, and have it in my account. Anytime we do see a sell-off of a growth name, we're going to, you know, evaluate the trade, show exactly what's going on. Pay attention to this Dollar General, you know, this big block trade here. I already knew it was Dollar General because they pointed out on the ticker. This is DG. But like I said, guys, we want to pay attention to those growth names. And that's all, really. You want to make sure that you know, position yourself for growth. I know a lot of people are focused on dividends. You really don't want to focus on dividends. You want to focus on growth. You want to focus on doing 30% a year rather than doing 5% and just collecting dividends each year. I know dividends do add on to your share purchase price, but you have to think about it like this. If you're going to do 30%, that, you know, that actually adds on to, you know, the added interest that people do see, which probably could turn into 100% by, you know, about 3 years, while you're still doing 5% each year with the same stock. So we look for growth because it's going to attract more buyers, it's going to attract more investors, rather than looking for boring stocks that are such as like a ExxonMobil, which hardly moves. I know Facebook, you know, you see Facebook definitely moving up, and Facebook is definitely not paying a dividend just yet. You know, Apple has a long-term chart, but what we see with Apple is that Apple is definitely, you know, gets kind of stagnant at times, but we see Apple definitely, you know, have that uptrend all the way up, and it has a dividend as well. So Apple's able to provide you with their pretty good return percentage and a dividend, so that's an added bonus to the stock. But we want to make sure that, you know, we're focusing on that growth name, on that growth company, rather than focus on boring names or, you know, tired out stocks that are, you know, that are probably at the peak of their you know, at their growth. So guys, that's all I have. If I see anything selling off, I know volatility should be returning into the market, but if I see anything selling off, you know, you guys will be definitely the first people to hear about it, because I will be buying those names in this account. And also with my personal account, you'll definitely see me, you know, opening up, you know, different positions, and, you know, I will tell you guys, explain the thought process to that, so that way you'll know, just in case you want to open up a position with me. So that's all I have for you guys. Take care.